Right, ladies and gentlemen, thank you, and welcome back to part 2 of the Landlord seminar evening. I've got Phil from Penlife who's going to be doing mortgage update now, so I'm just going to pass the stage over to him. Phil, to you.
Thank you. First of all, thanks for turning up for the second part. You're all still here, they haven't rushed off to go back and see what's happening in the vote today.
We may get a call at any moment.
Yeah, well, exactly. Just a bit about who I am. My name's Phil Mutter, and I'm the co-owner of Penlife Associates here in York and Equinox Financial Planning, which with financial advisors. We're chartered financial planners, which is the highest accreditation you can get in our industry. And we're whole of market for mortgage advice, so we can look at absolutely everything that's out there. As I say, we deal with the mortgage market, but we do absolutely everything. We deal with sort of investments, pensions planning, tax advice. So I've been asked to give you a talk about the mortgage side, but we do cover a lot of other aspects other than mortgages, basically. And I'll try and make this will be much shorter than the previous presentations, I do promise you. It will just be a whistle-stop tour around the market. So first of all, the agenda today, I'm going to be talking about whether you can still get a buy-to-let mortgage is the first thing, and what most people will be interested to. Discuss a little bit about the changes that people are now being classed as portfolio landlords, which has had a big impact in the market, and whether now is the time to fix or not. Still this very historic low interest rates at the moment, and there's some really good deals out there at the moment. And I'm going to touch at the very end, just have to talk a little bit on the tax side of things, because there are some solutions. Mandy's touched on that sort of CGT and inheritance tax, and there's a few little things that can be done now when you're sitting on large portfolios. So undoubtedly, certainly for buy-to-let in general, things have been really, really tough. Increased regulation, taking away reliefs, extra stamp duty, making it harder to get a mortgage. There's been a lot of headwinds. It's obviously coming down from the government. Because they want more houses and more affordable houses, but they don't want people to own them. So there's been a real push. And there's one sort of direction of travel that they're trying to make it more difficult. There's no question about that. And that's also been aligned following the crash in 2008. That there's been a real tightening in criteria for mortgages, making it more difficult to get them, and basically trying to make it so that less people can actually get access to buy-to-let mortgages. And this all culminated in 2014 with the mortgage market review, which basically has made it a lot tougher. It's still doable, but it's just a lot tougher than it used to be. And now, so there's now a new definition of landlord when you've got more than 3 or 4, that you actually become a portfolio landlord, and the whole raft of other things which we'll talk about have come into it currently. Good news is there are quite a few new entrants into the market. There's some of the challenger banks like Atom, and people like Metro Bank, who are trying to sort of muscle in on the big boys, and they're coming up with a bit more flexibility, a bit more innovation, and they're driving down some of the rates. There's a lot of competition in the buy-to-let market because they can't lend as much money as they used to be able to. They're having to compete more fiercely with each other to try and get the business, basically. And there's been some quite good moves now that you can now sort of move. You can now lend up to age 85, or it used to be 65, 70 was where they end. But there's many more lenders now who are letting you sort of spread the term over to later ages, which can sort of spread the cost. So as I said, there's new technology coming into there. There's other people that you can go direct, but if you want to go through that minefield, good luck to you. But it is what it is doing is generate causing innovation and more competition for rates, as I said beforehand. And there's greater product choice now. So there are some good things that are happening in the market at the moment, but there's definitely a lot of challenges as well. So, and part of these challenges, which I'll go through now, is that part of this tightening of the criteria, to make it more difficult to get one, was that they have very much tightened the rental coverage that you need to get a mortgage. So with a buy-to-let mortgage, I'm sure you've all been through this, but it's not mainly based on your own personal income. It's actually based on the rent of the actual property itself. And it used to be that they would make a calculation that it was on a low rate and a percentage of that. But what they have done is basically, it used to be, say, they'd say you get a loan of 100,000 and they would say the rent needs to be at 2%, 125% of that, and that works out to a certain figure, which I'll come through in a second. But that has now gone up to, as a standard now, you want a £100,000 mortgage, then they would calculate that at 5.5%, and the rent needs to cover 145% of that. In this example that I just got here, say you want to borrow 100,000, it works out that you need to have a rent of £665 per month to borrow £100,000. Okay, so you can obviously, if you want to borrow 200,000, then you can look at 1,300 and so on and so forth. And that is much, much higher than it used to be in the past. And that's just for a typical residential buy-to-let. When you're looking at HMOs, it's the interest rate, the stress rate is usually higher than that, and sometimes up to 150 to 155% of the rent of the interest, which means that you have to have very high rent in order to obtain the level of mortgage. So that's just as a rule of thumb, really. So 100 grand, you need a rent of £665 a month, and usually, and in most cases, you're going to need to have personal income of around about £25,000 per annum. So they have certainly tightened things up. If you're an experienced landlord, the personal income, there's 2 or 3 lenders who basically don't have a minimum income, but for the majority of the lenders, you're looking at having a sort of minimum income of around about 25 grand on top of having to pass the tests. And just coming back to what Manny was saying earlier, if you are a higher rate taxpayer or a basic rate taxpayer, that can also influence this rental coverage as well. So they were saying if you're having to pay a higher rate tax, you're less able to afford the mortgage. So therefore you have a higher stress rate to go on it. So there's a lot of things that have changed on this particular part.